January markets were volatile as we've started to see the implications of Trump coming in to take his new presidency term for the next 4 years. So there was volatility through equity markets and also through bond markets, which we'll discuss for the rest of the video. Clearly, with the Trump administration coming in, that's starting to get some traction with policy implications that they're looking to put in. So protectionist measures that they're planning to put in place, looking to aim to get energy costs down and allowing for some of the fossil fuel industries to be reinvigorated. And tariffs, which is seen to be a bit of a threat at the moment, but probably will come to reality over the next few months. And while there's uncertainty around some of those tariffs, timing, magnitude, and who is impacted by that, that'll be volatile for markets as they try to guess. It's effectively a bit of a guessing game in terms of the policy that's likely to be implemented by Trump and the administration. There's still company by company announcements coming through and volatility that's hitting certain companies. And there was a big one through January, which was the Chinese announcement of DeepSeek, which is an AI competitor to the likes of ChatGPT and Copilot from Microsoft and others. That they were able to replicate similar outcomes from the technology with what was a much lower budget than probably what some of the other competitors were expecting. And so I suppose that's a demonstration that the technology is moving at a very fast pace. And the faster pace there is, the more difficult it is to know who will be the winners and losers. And so one of the big beneficiaries to date has been NVIDIA. It's now one of the biggest companies in the world, around $600 billion of market cap, US dollars, not Aussie dollars. So you convert that to Aussie, which gets almost to $1 trillion, was wiped off of the market cap of that single company in one trading session. And so that's, in an ASX 200 sense, that's about a third of the market cap of the Australian ASX 200. So that's CSL, BHP, CBA, the list goes on in terms of the companies that would be falling into that in terms of the market cap attrition that happened on that single day. And that's the market trying to position for the fact that this AI technology is rapidly moving and it's hard to predict who the winners will be in that space. Yeah, so fixed interest markets should be boring with the Trump implications of tariffs or proposed tariffs and outlook for inflation, which is generally what the bond markets will look at. Inflation or tariffs are inflationary generally. And so bond markets are trying to predict what sort of implications there will be for medium to longer term interest rates. And generally they were higher, yields were higher, which is not good for values for bonds. Cash rates on the flip side are still heading in the right direction in terms of easing off to allow some stimulus into economies where interest rates, from a cash perspective, had been probably a little bit restrictionary. Now the talk is that may be a shorter cycle than what we've seen in the past, which means rates may come down and stay down for a shorter period of time than what we've seen over the last sort of 10 or 15 years. So for cash rates, the US Fed announced that they were on hold. So I think that's Jerome Powell and the team there sort of suggesting that they're seeing the data that's a little concerning in terms of inflation. That their trends were to reduce rates and cut rates from 5.3 or so percent. They've already cut 100 basis points down to 4.3%. The commentary is that it's still a restrictionary policy level, so there's still room to move down. But a pause there sort of suggests that they're looking at inflation, employment, which is still relatively strong in the US, and looking for signs that inflation is still heading trend-wise in the right direction, lower than where it had been over the last couple of years as a result of the COVID influence. The RBA had a good sign in terms of inflation, so the core rate I think it was about 2.4%, which is in the 2 to 3% band of what they look for. Unemployment here is still quite strong, so that is something that they will be probably looking for more signs of that there to see that there's pressure coming out to make sure that they're confident on wage price inflation, so that's still a little bit of a concern. They meet and will announce RBA cash rate outcomes on the 18th of Feb. At the moment it's 4.3. Most economists here are sort of suggesting that there is room to move down, so looking at a 25 basis point cut. But there's still data clearly that'll be announced over the next couple of weeks before that RBA meeting and outcome. So that will be, I suppose, what determines the likelihood that they will move. But at the moment it looks likely that they will move, if not now, potentially in May. Feb-March is always an interesting period for equities with reporting season. And so it's a time for companies, that we've mentioned previously, that it's time for them to give an insight in terms of how they're performing, what their revenues have been and have delivered over the period to the end of the calendar year last year. So it gives an insight in terms of how the consumer's performing, how businesses are seeing things, and gives a bit of an outlook for what the economy and what different companies and businesses are doing at this point in time. So, coming back to the fundamentals of diversification, taking a long-term view, overall the economy is still performing soundly. Overall, companies are still probably generating reasonable earnings growth. And they're fundamentally what drive markets over the long period of time. So yes, there's some volatility and noise in markets through this period, but generally you're still looking at earnings growth of greater than 5 to 10% over the next sort of 3 to 5 years. So taking that longer term view, you'd be confident that hopefully if Trump's policies don't impact too much, that you'd still see some positive outcomes from equity markets.